Hello, everyone, and welcome to InternetNative Payment Networks, a webinar hosted by Bitt to discuss the future of digital finance in the United States. Now, this webinar format was taken from our thought leadership article entitled InternetNative Payments, Banks Begin to Embrace Digital Currencies. This thought-provoking piece highlights myriad topics that we thought were worthy of deeper discussion. If you haven't already reviewed the article, please visit the link provided in this chat to download it. And this session is meant to be interactive, so we welcome your questions via the chat throughout today's discussion. Without further delay, I will introduce the experts who will provide further insight into the current and future implications for internet-native payments. First up, we're joined by Simon Chantry. He's co-founder and chief information officer at Bitt, and he brings a unique perspective on this subject. Simon, thank you for joining us.
Thank you, Chris. Yeah, Simon Chantry here from Bitt. I'm one of the co-founders. My background is in engineering. I got into digital currencies in 2012. I was fascinated by the subject, both from policy and technology perspective. Ended up co-founding Bitt in 2013. We were the first blockchain company in the Caribbean, and we were also the first firm to digitize a national currency using a public blockchain in 2016. So fast forward to today, and we have two central banks who we are digitizing their currency for as a CBDC technology solution provider. And we're live in 9+ countries and more coming later this year. Thank you, Chris.
Exciting, Simon. Next, we've got Imran Khan, who is Executive Vice President of Partnerships at Bitt, and he joins us bringing a wealth of knowledge, having led CBDC efforts at one of the Big Four. Imran, tell us a bit about that.
Thank you, Chris. As Chris mentioned, I'm head of partnerships here at Bitt. I'm collaborating with entities on enhancing the portfolio and capabilities of our offerings for our clients. So that can mean going to market with advisory firms that provide complementary services. It could also mean going and seeking partnerships where we could embed new functionality within our products, or technology partnerships where we work on bolstering and increasing the resiliency and the strength of our system. I'm also the project executive on the eNaira project for the Central Bank of Nigeria, which went live earlier this week. So if you have questions on that, a little off topic, but I'm open to those. And I've spent 10 years in tech consulting at Deloitte. While I was there, I was in the core blockchain team towards the tail end of those 10 years. And I started getting more and more into conversations with banks, leading banks in Canada and the US, that were particularly interested in if, when, and how they should get involved in digital assets.
Thank you for that, Imran. Finally, we've got Chris Campbell. Chris is the Chief Strategist at Crow and a member of Bitt's Board of Directors. Among his many accomplishments, Chris was unanimously confirmed by the US Senate to serve as the Assistant Secretary of the Treasury for Financial Institutions from 2017 to 2018. Chris, welcome to today's panel, and tell us a bit about that experience.
Well, Chris, thanks so much for well, first of all, thanks for having us. Chris, thanks very much for that kind introduction. It's really incredible to join by the incredible my other incredible panelists and the incredible thought leaders that we have at Bitt. As you mentioned, Chris, I'm a recent new board member to Bitt. The reason why I joined is I believe that our technology actually was leading the market and actually will be really the standard for adoption for CBDCs and digitizing digital fiat currencies around the world, as it has already started that way. As you mentioned, I was formerly Second Secretary of the U.S. Treasury, helping steward the U.S. economy for 2017-2018. Prior to that, I was a staff director of Senate Finance Committee as a chief negotiator on economic issues in D.C. for about 8 years. But we're kind of relevant to this conversation. While in the administration, we started a process that would begin the regulation, the harmonization of regulations on cryptocurrencies and blockchain issues, a process that is actually still underway with the current administration. And I look forward to talking about that and many other topics as we delve into this in the future, which I believe is what's going to likely be a digital US dollar in digital currencies around the world, and the kind of following regulation that's going to come because of that.
So much, Chris. Now, Simon is the author of the article. Can you please give us a quick overview on why you decided to write it? Let's first start with a historical context of financial networks, and if you can define and differentiate internet native payments, applications, and internet native payment networks.
Yeah, happy to. So yeah, I wrote the piece because I think what we're seeing now in market is a trend towards internet native payment networks. And so the piece goes through the distinction between internet native payment applications, internet native payment networks, and how they differ from legacy systems. So if we start with legacy systems, monetary authorities have traditionally serviced lenders in an economy for managing the reserves, providing reserve settlement systems, and basically playing that sort of top layer authority for the financial system and economy more broadly. The technology at that level has, while it has evolved substantially over the last number of years, with the introduction of the internet and sort of the explosion of Web 2, in the early 2000s, it provided.
We seem to have lost Simon for a bit. So we can move on to Imran and what's happening in the US, being a regulator and joining Bitt, pushing for the standards and solutions for central banks. Speak to us about what FIs are currently exploring within the realm of internet native payments. Imran, you're muted.
I'll take an example that's been mentioned time and time again, but I like to break it down into the steps of how JP Morgan went through their journey, because I think it's very logical and they are a pioneer in this space. So first they looked into blockchain and figured out, well, maybe there's something there that could actually be useful to break the silos between companies or corporations. Just like the ERP in the 70s and 80s broke the silos between departments, blockchain had the value of possibly breaking the silos between companies that are working together to get something done. So JP Morgan looked into the technologies. We're talking about 2016. So this is very early on, very much the word pioneer is really suitable in this case. And they looked at the technologies and said, we need to have something that's a bit more suited for the corporate context. So through their exploration, they said, you know what, we'll start investing and building a blockchain that is more suitable for the enterprise context, looking at confidentiality, scalability, allowing permissions to join the network. And having this network, they said, well, let's start tackling some of our pain points and start experimenting. One of those was information sharing between different banks. So they developed the Interbank Information Network, which is now called Link with 2 I's. And that was to share information such as, 24/7 cash and liquidity information, compliance inquiries, validation of account information. So all these information sharing and communication that's required between different banks to get something done, which has a lot of friction nowadays, especially in a cross-border context where there are rejections of payments, return payments, there could be delays in messaging. And now there's over 400 banks that are involved in this initiative. So through these experiments, they realized, well, it's great for information sharing. How about payments? If we always have to revert back to the traditional rails, we start getting all of this advancement up front. And when it comes time to transfer the payment, we lose the benefits. So the return on investment of this project is kind of limited unless we could address that last leg. And that's when they got into JPM coin. It's basically 24/7 business to business money movement from participating JP Morgan clients to transfer US dollars across that ecosystem. So it's a really nice story that starts from technology to experimenting and then realizing payments need to be solved to really get the full value from those earlier experiments. And since then, we have many banks that have been involved, and we're currently involved with the Monetary Authority of Singapore's Global CBDC Challenge. We're one of the 15 finalists. And there are many banks that are also part of that list. Citi, HSBC, Standard Chartered. We know SocGen is involved with the Banque de France wholesale CBDC project that was initiated earlier this year. Now moving on to payment networks. So just looking at what MasterCard and Visa are doing. So MasterCard holds a high number of crypto-based patents. I've seen claims that they are among the highest in the world as of last year. They announced their focus on supporting governments around CBDCs beyond just payments. They have a credit card solution or a debit card solution for CBDCs, and they're also involved with the MAS Global CBDC Challenge. And on Visa's side, they came out with a highly read paper recently called the Universal Payment Channel. And that's to interconnect different CBDCs and stablecoins. And even last year, they had a paper that was for offline payments for CBDCs. And another thing that's all the central banks are really looking at. Just in March, they were talking about the ability of settling transactions with USDC, a stablecoin. So if you hold stablecoins or any sort of crypto, you don't need to convert it to fiat or US dollars to be able to settle the transaction with Visa. They'll actually allow you to do that with USDC. And Visa, on the other side, will allow merchants to receive payouts to their crypto wallet. So there's a lot of advancements in this space, a lot of experimentation. We'll see where it all goes, but it's very exciting.
It is. Chris, before we get back to Simon, Imran just shared quite a bit. So there's a lot in the horizon. And the big question that went out with the image of today's session is the US playing catch up in the digital evolution?
Yeah, like unfortunately, I think the answer is a little bit yes. However, I think that like obviously see Russia and China and other larger economies moving toward actually racing toward digitizing currencies. And of course, the United States government is certainly not going to want to, nor will they allow for if they can stop it from letting those countries or a block of countries set the standards for digital currencies around the world. That being said, there is a process underway in the U.S. government to look at the potentiality of digitizing the U.S. dollar, how likely it is, what the challenges are going to be, and obviously we're intend to play a very large role in that process. But there's certainly a lot of challenges ahead, and I think it's also important that we may get to this a little later, but to see what regulations have been adopted by countries that once they digitize their fiat currencies, and what it means to other stable coins or other cryptocurrencies in those regions within their borders. So I think, but the reality is, yes, look, we are playing a little bit of catch up, but we right now the U.S. is the reserve currency. I think it will remain that way for quite some time, and as such, being a first mover probably doesn't have the biggest advantage on this, because should there be a hiccup in the or a challenge in the process of unveiling something as large as this and as a large scale as this, it certainly could be a real challenge economically around the world and will have a real ripple effect. I do believe the U.S. government is going to and has picked up the pace to digitize the dollar, and I think that day will be amazing when it comes.
Okay. Thanks so much, Chris. One follow-up question from what you said. The U.S. is currently the reserve currency of the world. Does the implementation of CBDCs like eNaira yesterday with Bitt and Central Bank of Nigeria and other future projects with stablecoins and CBDCs, how will that reconcile with the US being the world's reserve currency?
I think it's a great question. I think the world needs some kind of a stable currencies to back up or to use as a common denominator. And so I believe that I guess from my vantage point as a former U.S. government official, I believe that the U.S. dollar will remain that way, and has a very important and stable a stabilizing effect around the world and for a worldwide economy. But as countries move into the digital environment, and as the U.S. looks to do so as well, and as large blocks continue to do so, there could be a resetting of the playing field, and a new way of looking at currency altogether. I think that what's really important to remember, though, is that as the U.S. has the largest network of financial institutions around the world, And as those financial institutions are so intertwined and interwoven, both here in the United States and abroad, that network of important financial institutions and the regulators, the U.S. regulators that regulate those institutions, and the U.S. laws that govern their interactions, likely will remain dominant for quite some time. And so, the reality is, at least for the time being, short term, midterm, and I think probably long term, because of that system the way it is today, I think likely we're going to see an environment that may change a bit as we work through the interconnectivity of central banks and countries around the world with the economy. But I think largely because of the system that is currently in place and likely is not moving anytime soon, we're going to see something like this, like akin we have today, for quite some time.
Thank you, Chris. Now, a question I want to put to all three of our panelists today, from your varying perspectives. Why would a country currently advanced in payments, choose to adopt a CBDC? What would be the benefits to them? Simon, since you were cut short, you can go first on this.
Yeah, my apologies. And just to recap, I think where I had dropped off was talking about sort of the trend towards internet native payment networks. So just to recap that point, generally we see a trend from legacy systems towards internet native systems. So you'll see in the early 2000s where internet native payment applications started to become more prominent, and that's the likes of PayPal and Stripe and Zelle. These are applications where the user experience is primarily on the internet, so internet native payment applications. However, the settlement still uses legacy systems. And so the progression towards internet native payment networks is where the plumbing, the settlement, the trade, the transaction, everything happens on the payment network itself. So just wanted to recap that. As far as the reason for nations of all different shapes and sizes adopting internet native payment networks in the form of CBDCs, I think that there are many, many benefits, one of which Chris touched on in his last comment pertaining to the US and other countries moving towards digitizing their currencies. And that is, we see a future where central banks have digitized central bank money, so they've digitized their national currency. They interconnect those networks to sort of bolster and provide for more cost-effective and timely trade and settlement through a network of networks. So you'll have integrations at the network layer where you can do cross-currency exchange and cross-currency swaps that are all programmed into these CBDC networks. So I would say that's one of the, that's sort of where we see the financial system heading, is each country operating their own internet native payment network in the form of a CBDC. In addition to that, I mean, you think of all the use cases that enables, it stretches really across wholesale capital markets level through to retail remittance payments that can be administered sort of instantly and much cheaper than what we see today as far as the transaction fees that are charged for people trying to send money across borders. So those are two of the points I would pick out. Any of the other panelists? Chris, was that a question for the rest of the panelists as well?
Yes. So if you can hear from Imran.
Sure. So let's say, as being involved with the project in Nigeria, I've seen a country that has one of the best payment networks, really, really fast payment networks, very high usage, and a high level of adoption of those payment networks. And in that country, one topic and one use case that keeps coming up is leveraging this programmability of money and leveraging it so that they can issue some sector specific and regional specific tokens so that it can bolster or provide economic stimulus that is highly targeted in a particular region. So for example, in this case of the pandemic, in Canada, our province of Quebec was trying to bring in as much tourism as possible from Canadians or within Quebecers within different regions of Quebec. The way to do that is through incentives very often. And if we can have programmable money that can giving it a little stimulus to enhance tourism in particular parts of the country with a time-bound token, we could really inject that kind of stimulus directly and very quickly. And with that programmability and the transition from cash to electronic payments, there will be additional data that will be useful to understand how money is actually flowing through the different regions of a country or a state, and how fast is money moving, what is the velocity of money. And this additional information can generate insights that can direct monetary and fiscal policy.
Okay. Chris, your perspective?
Yeah, it's again great question and incredible great answers from Imran and Simon. But from my perspective, look, I think that digital currencies are a way of democratizing, effectively leveling the playing field for those who have and have not. I think it certainly allows for the approachability and availability for those people who are perhaps underbanked or non-banked. Being able to use their phone or whatever it is to be able to interact within the current system, within the system. I think there's I think the settlements, foreign exchange possibilities, and the way that's not only central banks and financial institutions will interact overnight trading and the like, but individual retail investors and others that are participants in the system will be able to have a better grasp and a chance to actually participate in the systems that perhaps we haven't even time to begin to think about today. Candidly as well, I think that an open process that is on an open blockchain allows for governments to be able to better utilize AML KYC and be able to make sure that currencies around the world are being used in a way that is lawful and is not being used for things that perhaps would be harmful to societies or individuals. So I think it's all good. I think there's so many significant reasons from both from the government and non-government and private sector experience and perspective, the reasons why we see now this march and this, in fact, this sprint for central banks and governments around the world to digitize their currency, because the upside is just so great and the downside is becoming less and less, and the risks are becoming less and less as well.
Okay, thanks for that, Chris. I did promise this would be an interactive session, and I think what we are discussing is a good point to inject a two-part question from one of our attendees, Robert Axe. Can you discuss Bitt's experience with the Central Bank of, well, the Eastern Caribbean Central Bank, and does this serve as a template for other digital currency blocks, and particularly in sub-Saharan Africa? How does the introduction of e-Naira advance the plans of other central banks?
Perfect. I'll start with the first question and the second, but then I'll hand it over to Simon to provide additional color on the ECCB project, since it happened before I've joined. So the Eastern Caribbean Central Bank had a context where the economies are really not digitized. They really have a coordinated effort with the other Caribbean countries to really push digital adoption. E-commerce is very low. There's low usage of that. Trade is very localized, so within cities, and in a country where you have different islands, each island are really trading with themselves, as opposed to across the different parts of the same nation. And coordination between these different nations, those payments are also restricted, because we're thinking about transferring cash with boats and planes, which is very expensive and requires a lot of float being available in every local market. So there was a push towards that digitization, and we all had very aligned kind of vision on what digital currencies could do to advance the economies there. So I'll let Simon provide more information on that. But whether was it used as a template? And I would say yes, because when we started digitizing national currencies, we started doing that in Barbados, and we've used two approaches. One was the initial way of tagging currencies, and it was very leading edge at that time. And then blockchain technology has evolved, so that project has moved on, and that was the inception point and the model that we started using for the Eastern Caribbean Central Bank, but taking in a central bank's perspective, what they actually need. So we started building up our product around what central banks need, highly informed by the Eastern Caribbean Central Bank. We got to understand that globally, all central banks are trying to figure out how should it be done. There's very few templates out there on which to really benchmark. So we used the research that's out there publicly available, as well as some relationships we already have with many central banks around the world and the ECCB. And that informed what our product is. So when we went to the Central Bank of Nigeria, we demonstrated what the product currently is able to do, which is very much aligned with our first major client, which was the ECCB. Through that project, we started enhancing additional functionality, putting in some internationalization or location-specific requirements that we think will be needed in other markets also, but were not required for ECCB. So our product is still evolving. So yes, it was used as a template. And on the question of sub-Saharan Africa, actually all of Africa is looking at this project that we're doing with the Central Bank of Nigeria. The central bank has told us that other central bankers of the region are reaching out to them to try to learn from their experience. What went well? What are the challenges? What do they need to think about? How would we do this differently? And we're engaged with the Central Bank of Nigeria to try to answer those questions. So yes, there is a very big impact on how central bank digital currencies will be done throughout Africa. And whether there's going to be collaboration or not, that's to be seen. There is willingness for the Central Bank of Nigeria to bolster trade through the Central Bank Digital Currency Project. Simon, anything you'd like to add for the ECCB?
Sure, yeah, thanks, Emma. I would say that Governor Timothy Antoine is a visionary in the sense that he saw this trend coming and recognized that it would, country by country, central banks would do this, or currency by currency, they would do this. But he also recognized that that the tools or the technology and the structure behind a central bank digital currency and particularly the EC dollar, which spans 8 countries in the Eastern Caribbean Currency Union, that it could be a step in the direction of realizing the goals of the Caribbean nations, which are having a multilateral settlement network. So right now, these nations are dependent on correspondent banks in Canada and the US to settle their cross-currency trade through the intermediary currency, which is the US dollar. And so long have the central banks of the Caribbean wanted to be able to trade directly with one another. I think since in 1974, they laid out their intent to create a multilateral settlement network in the Caribbean. So we've been sort of championing this alongside the central banks who are interested in participating in the Caribbean. And I think more and more are increasingly interested as CBDCs become a reality. There will be the ability for them to interconnect their digital currency networks and for trade and exchange directly amongst one another. So I would say that is sort of a more of a macro driving factor for the Eastern Caribbean, the digital Eastern Caribbean dollar, Dcash, in the context of the Caribbean as a whole. So we definitely see that as an exciting opportunity. Coincidentally, I can work that into a question that was asked by one of the panelists here, if you don't mind, Chris, because we're talking about cross-currency settlement. And so the question is from Matt Hamilton, and he says, how do you see the way in which CBDCs will settle between each other? Either they need a counterparty-free bridge asset, or they need to replicate the current nostro-vostro relationships that are used currently. So I think it's a great point. The idea here, to Matt's point, that a recreation of the nostro-vostro account system could very well happen. However, it would be, the process would be smoothed, or how could I say, the process will be substantially more efficient, both from a cost and time perspective, because we will be implementing what's called atomic swaps. So atomic swaps across CBDC networks. So that means in a single action, you can execute a foreign exchange transaction amongst 2 currencies. So Bitt is building solutions that will address sort of both sides. So that's one angle. You mentioned the second is having a counterparty-free bridge asset. This is one where, again, I think central banks are considering it, although given the ability to execute atomic swaps between CBDC networks, they'll likely try to avoid having a counterparty-free bridge asset. I know that it's been discussed, and for the crypto people in the crowd, people would say, oh, maybe Bitcoin could be that counterparty-free bridge. Also, the IMF SDRs. There's been different research that's proposed that the IMF SDRs could be used. I do think that they will go network to network for an integration. Now, what's interesting is getting into some more of the complexities around how to administer this sort of system. So if you're familiar with the CLS, the continuous link system, this facilitates trade amongst the major international currencies. And it sort of works where each central bank has to fund accounts to a certain degree based on the trade activity that you expect amongst the different currencies. And so we might see a replication of that, again, with a major upgrade in terms of rails and the exchange process itself. Or we could get into real-time minting and real-time destruction of currency, which is a whole other road to go down. And so Bitt is developing solutions that meet each of the use cases that we see as possible. But I do think that it'll likely be the atomic swaps executed from network to network.
Thank you, Simon. Chris, I wanted to ask a question about cybersecurity and cyber defense considerations from the FI perspective. What are some things that they should consider seeing this digital deluge, for lack of a better term, that they're in the middle of?
Look, there's absolutely no question that it's maybe it's no secret to me, maybe it is to some who are listening in, but financial institutions and financial institutions around the world are actually the #1 target for cyber criminals, both state and non-state actors. It is just a reality. Will become a more of a reality the more digital and the more online banks become and financial institutions become. And obviously, moving to a digital environment of any fiat currency is going to, probably hasten and give more of a become not a welcome map, but it's certainly an interest I think for folks who want to penetrate those networks. Just as we do today, and countries around the world do today, financial institutions around the world do today, they have to be one step ahead of the bad guys, if you will, of those cyber criminals, and so. There's a lot of technologies in place and processes in place, both here in the States and around the world, that utilize national intelligence groups and international and domestic policing agencies, but also a significant amount of private sector technologies that protect those payment networks and will have to do so when we move to a digital environment. I could give us a plug for Bitt. I think that I think that we have developed an incredibly great system and an incredible technology that I think that when working together with national governments, we'll be able to help stabilize and make as secure as possible that transition. But there's no question we always have to stay one step ahead, and we have to continue to evolve and working with our partners to make sure that currencies, financial institutions today and as we digitize up tomorrow remain safe and secure.
Hey, Chris, there was an anonymous question that I think this would be a great segue into China versus the US in terms of regulation. KYC is undoubtedly easier to enforce in a digital system, but how do you strike a balance between Chinese control systems, i.e. TSAP, versus America as the land of the free?
Yeah, look, again, I hate to say this. I have to keep looking at as a U.S. perspective, but I'm former U.S. government official. I think the U.S. is probably one of the most free governments when it comes to currency around the world. But make no doubt, and let there be no doubt, that we have a very stringent KYC AML processes in place in the United States that govern our U.S. financial institutions that are very well regulated and enforced. That being said, the U.S. doesn't have the capital controls as we see in other nations, particularly China, and so we have a more free float and more mobile currency that that oftentimes leaves our country and comes back to the country. So look, at the end of the day, there will be international consortium that work on this, but the reality is as governments, and this is just a reality. I don't know exactly where the U.S. government's going to fall on this, although I'll postulate for conversation that as governments around the world have adopted CBDCs and moved their fiat currencies into a digital environment, they also, that move also comes along with very stringent and quite tight controls on non-fiat currencies. China and Russia have done so, effectively outright banning in some cases other cryptocurrencies that would be in contention with their digital currency. Again, I don't know if that's where the U.S. government's going to go, but I do believe that there will be significant new regulations and standards on AML KYC in the digital environment as we move that way more fulsomely. And it's going to be hard for most cryptocurrencies to be able to keep up with those high standards that the U.S. dollar and I think the Federal Reserve and other regulators in the U.S. will impose. But that doesn't mean that they won't or can't. But I do believe those regulations will be followed on as we move toward a digital environment.
Thanks. Now, one last question to you, and I'm going to open it up to Imran and Simon as well. If CBDC is being used by FIs, how would the unbanked access that financial ecosystem?
Yeah, like Simon and Imran, I will have an incredibly great perspective on this as we are now in the African continent working. But yeah, from kind of an overall FI financial institutions perspective, it's interesting to look on the African continent where there are no branch systems. There aren't any banks that have branches in the middle of nowhere. We see that most people, obviously, everyone has a cell phone, and the birth of and the explosion of fintech around the world, Bitt notwithstanding, have democratized banking in a way that would never otherwise have been able to had there not been this explosion with everyone having access to cell phones. A lot of folks, not in the United States, nor not in the OECD countries, are effectively they bank from their cell phone, and therefore allowing access to the financial institutions and the networks and the payment systems that we have around the world, allowing them to be able to have access. There's not a reason why we can't do something like that in the United States, and there are many private sector financial institutions and fintechs that are doing that right now. And so I believe as we move toward a digital environment and we allow for greater and easier access on the blockchain and through digital currencies, people will be able to use unconventional means to be able to participate in the system that they perhaps otherwise are locked out to today.
Okay. Imran, you would have spoken about the eNaira launch just a few days ago. Can you answer the question using references from eNaira?
Definitely. Mm-hmm. So the Central Bank of Nigeria has clearly stated the eNaira is a journey, not a single event. So this first launch this week is actually for banked users using a smartphone app. So it's available on the Google Play Store as well as the Apple App Store. And this is a first community they wanted to target because it was going to be easy. It's something similar to what they know, and we were going to test the system and continue to evolve it. The next step that's already been communicated publicly is moving to feature phones using USSD, which is a very interesting and very pervasive technology and approach used in big parts of the world, where you open a text-based communication channel using your cell phone. It looks a lot like SMS, and you can create a wallet using that. So that's what's to come next at the Central Bank of Nigeria. There are some other regions that are looking at secondary network connectivity, such as like satellite internet or redundant parallel networks. Just in case a cell phone network goes down, you still have some sort of connectivity to enable continued payments. And there's lots of research going on for cards with offline balances. And this is a very cutting edge research that poses high risks, but high value as well. We're monitoring that very closely and working with our partners to explore this further.
Simon?
Yeah, so I wanted to pick back up on the access to for financial institutions. So the question was, if CBDC is being accessed by FIs, how do the unbanked access this? And I just wanted to point out, I guess, for the audience, that CBDCs, it looks like they will follow what the Bank of England refers to as the platform model. We've referred to it as a marketplace model for some time, and this is where the operator of the CBDC network, which is the central bank itself, in collaboration with a firm like Bitt, we operate the network and we open APIs to licensed entities. So those entities, while some of them will be financial institutions, some of them will also be fintechs and payment service providers, basically any institution that the central bank deems worthy of having a license to access the CBDC network. So it certainly won't just be commercial banks. There will be strictly payment service providers and different applications. Who knows, maybe social media companies will obtain the necessary license and integrate payments into their platform. It's really meant to be a compliant payments network where you can access it via APIs to provide a multitude of payment services and financial services to end users. So I hope that answers the question of how we will actually access unbanked individuals to provide sort of powerful digital financial services to all sort of sectors and corners of the economy.
Okay. Now looking ahead, because we just saw a week and a half ago, the G7 promised to work together to establish common goals and regulations around stablecoins and CBDCs, and the letter from the Chamber of Digital Commerce to the President's Working Group to do the same. What will the future look like? Will stablecoins, CBDCs, and cash coexist? I open that question to all of you. Chris, can you go first?
Sure. The answer is going to be yes. For a period of time, we're going to have both. And I believe that over time we'll likely move to a sole digital economy. But there's always a transition. That transition might be quite long, but there is. That process has begun. Around the world, and it has started that process, the conversation, at least in the United States. So I do believe that there'll be kind of two systems for quite some time as we move toward and evolve toward effectively a digital system. I do applaud the U.S., although it's of course not a first mover, and other governments around the world actually to start looking at this process, the EU and others, Japan and Singapore and anywhere. I don't name them all, but there's so many governments now around the world looking at digitizing that there's this is a good process, a process that needs to begin, a conversation that absolutely has to take place. Again, I believe it's an inevitability now, a time where actually governments around the world we will look back and many years from now, perhaps it's our kids that'll do this, but look back and wonder why we ever used paper dollars. But at the end of the day, it's an interesting and great time to be a part of this process as we move toward that probably inevitability. And working with our colleagues at Bitt and our partners around the world, excited to be a part of this process.
Okay.
Before we,
go ahead.
Yeah, just on the point of I think Chris, you had asked, are stable coins and CBDCs, are they going to coexist, and how is this going to evolve? And again, I just want to bring it back to the thought leadership piece, where basically what we recognize is the fact that the private sector has acted, and they've developed solutions in the form of private digital currencies, whether they're backed by national currency, which are stable coins, or if they're unbacked and they're sort of a digital asset category in the likes of Bitcoin and Ethereum. And I guess the point in including the different metrics that I included in the piece was just to show the trend that there's increasing usage and there's increasing adoption, and there's been sort of commendable and really impressive progress and development from the open source community. So I sort of categorize it like that. You see, the open source community is really impressive at developing, very novel solutions. And so that underlying technology will now be used by central banks to digitize their currencies in a purely online environment for internet native payment networks. And so whether or not the future is coexisting with stablecoins and CBDCs. Maybe CBDCs can fill a lot of the gaps that stablecoins are looking to fill. But I think it will largely revolve around our central banks able to capture the lessons and the evolution and the different solution characteristics that have happened in the open source movement and adequately implement them in their own solution. To tie it back, I think it was a great question about that Matt asked about sort of the atomic swaps across different currencies. This is largely related to the economic activity that takes place between these countries. So certainly the use in atomic swaps, it will be more useful in a context where these nations trade a lot with one another, or if there are remittances flowing back and forth, right? So the economics have to be there. So certainly there will be more cross-currency links and more cross-currency exchange where there's already economic activity. So that's where Bitt comes in to help service those bridges and service that exchange functionality.
Thanks for that, Simon. Imran, do you have anything to add to Simon's point in terms of CBDC to CBDC transactions?
There are some interesting resources that are exploring this right now. So the BIS has 2 projects. One of them is the MCBDC, which is well on its way. So there's lots to look there. There's another one that's started by the BIS Innovation Hub in Singapore. That one's a little newer. So some good resources there. Interconnectivity between CBDCs and stablecoin. I did refer to a paper by Visa called UPC, the Universal Payment Channel. So they start looking at interconnecting different CBDCs. So I would suggest exploring those a bit more.
One last question. As a Caribbean-based company, how do you guys see the adoption and evolution of CBDCs within the region? And what advice would you give to the governments that aren't prioritizing research into the space? Simon, as co-founder of Bitt, should you go?
Sure. Yeah, I guess I would just bring us back to the desire for Caribbean central banks and Caribbean political leaders to form that multilateral clearing settlement facility, right? To have that Caribbean settlement network that we've called it, and now the IADB, the Inter-America Development Bank, have also picked up on that. They've done some writing. They sort of picked up on some of the work that we've done, and I think they're pushing forward that initiative as well. So that's sort of the end goal that I think a lot of Caribbean central banks are motivated by. So it's an interesting example of a part, a geographic region, a part of the world that are motivated to do CBDCs specifically for facilitating inter-island trade, more effective, more efficient inter-island trade, and cutting out the costs and time associated with payments and settlement and trade settlement using the existing system. So I definitely commend, the central banks of the Caribbean. You have Bahamas, you have obviously the Eastern Caribbean Central Bank, and now Jamaica is moving forward with a pilot as well. Definitely first movers. But again, I believe that they're motivated by the fact that they see an opportunity to realize some of the goals that have been spoken about for decades now within the Caribbean.
Okay. Imran, you've touched a bit on Dcash with the ECCB and with working with the eNaira with Central Bank of Nigeria. I think what we've discussed is how Bitt's solutions really service from end to end the entire financial ecosystem of any country. Any closing thoughts in our final moments?
Well, I'd like to add that we have helped throughout the whole spectrum from advising central banks, which we do a little less of, on whether they should launch CBDC or not. But in some cases, we've positioned our solution for as a sandbox, so that central banks can actually explore technology, understand what it could mean. And it's actually one of my first exposure to Bitt was when I was at Deloitte, and there was an opportunity in another market where I saw a need to implement a technology, a CBDC proof of concept, and then do some analysis and some reports on what this could mean for that economy. And I had brought in Bitt to actually be that sandbox to quickly get it up and running, as opposed to spending time and money to build that for the end objective of doing the. So we serve the whole ecosystem. A journey that we've gone through over the past 5-6 years is we've built a product that can cater to all stakeholders of the ecosystem, whether they're issuing a new currency, right, as a stable coin or CBDC, whether they're a financial institution that need to interoperate with it through APIs or the applications that we've built, or the merchants or the consumers or the governments. So yeah, we cover a whole spectrum and really look forward to more opportunities across Africa. We have another announcement that's coming out soon, so stay tuned for something in Europe.
Thanks so much, Imran. And Chris, we look forward to your expertise serving on our board of directors. Any closing comments?
I'm just excited to be a part of this process and excited to join Bitt. We're at an incredibly great and perhaps challenging inflection point where we're going to be doing this a lot more, a lot quicker, and it's really fun and extremely excited to be a part of a company that's going to be at the forefront of this digital revolution. So look forward to working with those who are listening in and many others to make sure that we all work collectively together to make sure that this new reality works, holds, and that does what it's intended. And so again, look forward to the bright future ahead of us, and appreciate everyone tuning in to listen to us, and look forward to additional conversations offline when the opportunity presents themselves.
Thank you, Chris. Well, thank you, gentlemen. This discussion definitely gave us some insight into the current and future digital economy of the US and the world. We have addressed most of the questions that were submitted via the Q&A, and I thank you for that. And I thank you, everyone, for joining us today, and we look forward to future sessions.
Thank you, Chris.